In this video, learn how to spot trading signals right on the open to catch huge stock market trades. Hi, I'm Mike Bellafiore, co-founder of SME Capital, and we're a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade, and the playbook. In this video, we share a step-by-step, in-detailed trade analysis of a trade we made in Federal Express generated from a powerful trading signal that you can learn to spot to make highly profitable trades.
So this was a trade I made the other day in FedEx. We call this a Dr. S trade for reasons that I'll explain in a little bit. But this was a retracement after a high volume, after heavy volume right on the open. So the trade idea behind this is that there's heavy and elevated institutional selling right on the open after a significant gap down, showing that institutions are dumping the stock, which helps to set the tone for how the stock may trend lower for the day.
Okay, so the big key for this is we're seeing heavy volume right away, right on the open, which indicates that big money traders, big players, institutional traders, big hedge fund traders, they are putting a lot of money to work into this idea right away. Yeah. And what this is doing is this is signaling and leaving a footprint that these big money traders, they really want into a position if the move is up, or they really want out of a position if the move, in this case, is down. They really need to sell. That heavy volume, that heavy selling is signaling to us that there's a lot of inventory to move. And because there's such heavy inventory right away on the open, all right, that is leaving a footprint that this potentially can be something that can close low of day. This potentially can be something that can be lower 2-3 days from now, because big money traders can't sell all of their inventory in 3 minutes or 5 minutes or 6 minutes. All right, but the fact that there's more volume in this 3-minute period or 5-minute period or 6-minute period right on the open, relative to how much volume is done in the same stock at the same period of time. You know, so if there's 3 times as much volume done in the first 5 minutes right on the open in FedEx, or 10 times relative to how it normally trades, that is giving us a signal. Those are footprints from the big institutional traders that we're picking up on that can signal, hey, they're going to sell this thing for the whole day. Hey, they're going to sell this thing for 2-3 days. These guys need out. They want out. Okay, and so that is something that's, and we can do this long. We're going to do this on the short side, but we can do this long and short.
So that's like the main overarching idea. In terms of like the specific play, we'll see price end up pulling back into VWAP, and when it's unable to make a meaningfully push and hold above VWAP.
I'm going to interrupt again. I let you speak for like 30 seconds. I'm going to interrupt again. Okay, so let's just get our vocabulary down. Let's get on the same page. Okay, when something goes down, and then, so in this case, FedEx tanks on the open, goes down 4 points, and then moves back up to the VWAP area. That move back up is called a what?
Pullback.
Okay, it's not called a pullback, and that's why I want to get, what is that called in trader parlance?
Retracement.
Thank you. It's called a retracement. Okay, and so if something had been really strong and gone up 4 points, and then traded down into VWAP, that would be a pullback.
And so once we see sellers reestablish control again, price get back below VWAP, the stock should trend in the direction of the opening drive. This is a trade to hold for a longer intraday or potentially multi-day move. And just as like a footnote, just risk 10% of your intraday stop per tier.
Good. I really like how you do that. I like how you are identifying the trade and identifying your risk. I would encourage you to do more of that.
So on the big picture today, there wasn't any news on the China trade front or Brexit. The House was doing some stuff with the impeachment, but the market wasn't really reacting to this. We were seeing that the market as a whole was just in a range for the day. So intraday fundamentals. So since they were reporting earnings, their EPS missed significantly, $2.51 versus $2.84. Sales also missed below the estimate at $17.3 billion versus $17.57 billion. Their forward guidance was also lowered significantly below the estimates. We see this also is coming on the back of some Amazon news that their third-party users are now going to be prohibited from using FedEx as a distributor 2 days earlier, and then also earlier in the year.
Got to interrupt again. Apologies prior. I put all that red in there. These earnings are not good. This is a big company. This is not going to be a good conference call for these guys. Miss on EPS, guide lower for the full year, missing by a lot, and now, essentially, they're going to lose lots of sales shipping for Amazon and for third parties using Amazon as well. These are terrible numbers.
And so I have some of the levels written down. The ATR on this particular day, for the past couple of days, was been just over $4. The average volume is about 2.8 million. Our vol today was particularly elevated at over 8. The short float is about 2%. The overall float is about 240 million. The institutional ownership is 72.7%. Ideally, we'd like that number to be higher, just because that would be an even stronger check for the direction of the opening drive and then the retracement. And on this particular day, the stock was gapping down about 7% in the pre-market.
If you want to learn 3 real-world setups that our traders use, including the simple setup that we teach all of our new traders and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing right now at the top right-hand corner of your screen. That's going to open up this free registration page in the new window, so don't worry, you're not going to lose this video. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
And so you can see here on the daily chart, FedEx has been trading kind of sideways for the past year, and now we're starting to get below some important technical levels. Those levels will be important for taking trades during the day. And you can see on this 5-day chart how significant the sell-off was as a result of their earnings. And then it's just a 5-minute chart and then a 1-minute chart. And so given the backdrop of this trade, you always want to have reasons to sell before you even think about getting in. So the idea of this retracement is that once sellers reestablish control and are able to get price back under VWAP, the stock should trend lower. Therefore, your reasons to sell should be when the stock stops trending lower. So for me personally, when I see a stock that's greater than half an ATR away from VWAP with buyers stepping in, that can usually be an indication that the stock may be bottoming. For this particular setup that I've been working on, I find that it works best when it's between 3/4 and a full of an ATR away from VWAP. But the logic is still valid if it's half an ATR away from VWAP. And then just relating this back to the trend lower, if it makes a meaningful higher low, that can be a place to cover some risk. And then when it makes a meaningful higher high, that can be an indication to you that the trend may be over for the day. So in terms of trade management, we see that institutional sellers step in right on the open with elevated volume, showing that they're interested in selling this more, despite the gap down. This also shows us that institutions are likely aren't able to completely get out within the first few minutes. And as a result, price may drift back higher, and when it does, that might be an opportunity to get short for an expected move lower for the day. And then we see that price pops back into VWAP, but isn't able to really push or hold back above that level. And we can see that we were getting up to this 1050 area and weren't really pushing higher, showing us that sellers were still in the trade. And yeah, that shows us that buying pressure really isn't substantial enough to hold the price up. Therefore, once these buyers step out of the way, the stock should fall back and retest the lows and potentially.
Okay, so 2 points we got to highlight again. The thrust to the downside, how would you describe that?
Intense.
Good. The volume?
Elevated.
Good. That is what we're looking at that sets up the short on the retracement and failure at VWAP?
So yeah, you could get short tier 1 just risking against 150, this 151 area where we rejected from right on the open. And then as you can see, we start to come back up here into this little consolidation area.
Yeah, and one point about the VWAP right there, which is we're early in the day, the move to the downside is really steep. So when we retrace back up to VWAP, we have to understand that it's very possible it can leak through VWAP. It's so young in the day, that VWAP indicator is not going to be as reliable as if it was later in the day. The steepness of the move makes for it stopping right at VWAP and not leaking above it, less reliable as well. So we have to game plan for, it could just leak through there and then roll over, and be cognizant of that with our pricing. Good.
So after we get that initial push back down, we do see a little elevation in volume. That can be an area to short once it does pull back on lighter volume. Retrace a little bit here in lighter volume. So you can get short tier 2 there, risking back above VWAP. The thesis is that the stock should go back down, retest the lows, therefore VWAP should not be reclaimed if your thesis is still valid. One setup that I particularly like is when it makes a technical higher high, still holding below VWAP. Where it makes a high and then it makes another pivot high, usually triggering some stops by people who are getting short in this area. So I find that this is a pretty reliable area to get short for a tier 3, risking again back above VWAP.
Yeah, and so the way I look at markets, the way the short that I liked the most out of all of the shorts was it retraces back up to VWAP. And you could see there was a little bit of a battle around that VWAP area. You could see the seller holding it up. And a little bit of a range was created. And then it got below that range. Aggressive, short it, hit it, go after it, get after it, risk on. When that range broke right near that VWAP area, when that range actually had held up a little bit and some volume had been done in that range. I think that is a risk on tier 2, tier 3, tier 4 study area for trading as well.
And then so we can see that it breaks the morning low right around in here on only slightly increased volume. But since there isn't great immediate follow through to the downside after this break of the morning low, for me there wasn't an add. In a situation like this where you are trying to find places to add, you do want to be selective, and when you do find the places to add, you really need to add size. But for me, I wasn't looking for an add once we broke the morning low.
Thought for you, when we're making significant new lows and you think that that's, particularly when you have a thesis of, hey, this could finish low of day, or hey, I think this can finish low of, I think this can go down for 3 days. When we make a significant new low, you can think about adding a little bit of risk to that trade by shorting pops and then setting your stops above those last consolidation areas. I like to add risk when we're making significant lows when I have a higher time frame trade on. And if you think about it, it doesn't really make sense not to add risk when we're making new lows or we're making significant new lows. If you're holding from these higher levels and not covering when we're making new lows and it's making new significant lows, and you think something can go low of day, and there's confirmation in the price action that your idea is playing out, how does it make sense not to put on more risk? Of course it does. So when you see it, when there's confirmation of your idea, those are always the best trades, right? And so that's hard to do, right? But you have to be thinking in your head, what's the big picture for this trade? What's the big picture for this trade? What's the big picture for this trade? Which is low a day, low a day, low a day, or lower in 3 days. That helps you to put on that extra risk at these much lower prices than you initially started your short. Go ahead.
So for me, something that I've been testing out in terms of taking size off would be once it gets too extended from VWAP. This is again just an idea that I've been floating around. But once we get down here and start pushing past half an ATR away from VWAP, and we do start to see some buyers start to come in, start to try to hold up price a little bit. This can be an area maybe to size off a little bit. Volume wasn't great as it was making a new low a day, but time of day is also around midday. So the logic here is that it might not be able to push much lower given how steep the descent is. It was still possible, but we were starting to see some buyers come back in. So this could be a signal that downward momentum may be stalling. So this would be a place to cover for me personally. And then as you can see throughout the 5-minute, we do start to make like meaningful higher highs, signaling that the downtrend may start to be fading. It's not necessarily a signal that the stock would correct and maybe somehow get back above VWAP and finish at high day or anything like that. But it is a signal that downward momentum is slowing and that buyers are starting to accumulate at these prices. So once it does start to make a higher low, this would be a place to risk off. And then coming into the end of the day, we do get this quick pop up above this 147.50 area, which does make a meaningful higher high. But we, again, weren't able to get back over this technical level. This is when your judgment can come in if you want to cover with if it does make a meaningful higher high or if you want to hold it into the close. But for me personally, when I saw it make this pop like this, I thought that the momentum was continuing to the upside.
Yeah, just work on when you see something make a significant new price high. When something is down like this, if you can, you then want to try and risk off into the pull-in, into the pullback, as opposed to paying the price above that resistance area. That's when you want to cover into the pull-in.
Yeah, I should have been a little bit more patient and just let it really show itself, yeah. So for the trade variables, they had a triple miss on earnings, EPS, sales, and forward guidance. They were gapping down greater than 5%, which is something that you want to see if there is a triple miss. Tested its daily level now for like the 7th time and was now breaking. The more times it tests the level, the more likely it is to break. So given that this was the 7th time, it was much more likely to break. And when it did, we did see it give out. It was also one of the highest volume days of the year, which is something that you want to see in a stock that's breaking down from such an important technical level. And then you see significant selling right on the open below the important technical level, setting the tone for the day. Something else to also note was that it never traded above VWAP and never held above there for a meaningful amount of time, which could lead into further days of trading this by showing you how weak it was throughout the entire day.
All right, good. Go back to that slide. Yep. And just want to highlight significant selling right on the open, elevated volume, right on the open, leaving footprints that this can be something that is going to trade much lower than that initial opening drive. Okay, good. And good job with your variables here. Good trade for us to be studying and thinking some more about long and short. So now it's your turn. What did you learn from this video that's going to help you make profitable trades in the future? Let us know by leaving a comment below right now.